What if a Wall Street titan just opened the floodgates for crypto to all its clients? Morgan Stanley has indeed done just that, signaling a significant shift in traditional finance's embrace of digital assets. This move could act like a giant on-ramp, potentially drawing more institutional and retail money into the crypto market, much like a public ledger, where everyone can see the transactions, building trust. Imagine if a presidential pardon could completely flip the script on crypto regulation. Discussions are intensifying in the Trump White House regarding a pardon for former Binance CEO Changpeng Zhao, convicted of money laundering. This move, seen by some as a political statement against the Biden administration's crypto crackdown, could pave the way for CZ's return to Binance and signal a new era for digital assets. The crypto market just experienced a sudden jolt, sending Bitcoin below $118,000 and Ethereum near $4,000, directly tied to President Trump's recent comments on China. His threats of rare earth export controls and canceling a meeting with Xi Jinping spooked investors, triggering a broad market sell-off. Yet, privacy-focused Zcash and Litecoin defied the trend, holding on to significant gains, with Lieutenant Colonel surging on ETF speculation. If you thought crypto was immune to global politics, think again. A massive $1 billion liquidation just hit the market. US President Trump's threat of new tariffs on China sent Bitcoin plummeting below $105,000, with Ethereum and other altcoins following suit. This event underscores how quickly macroeconomic tensions can ripple through the volatile digital asset space, impacting thousands of traders. The cryptocurrency market just experienced one of its steepest single-day declines, wiping out billions in value. Following President Trump's announcement of 100% tariffs on China, Bitcoin briefly dived 10%, and many top 100 altcoins plunged over 40%. This geopolitical risk sparked heavy long liquidations, erasing nearly $280 billion from the market cap, and highlighting crypto's sensitivity to global events. Experts are warning, Bitcoin's unprecedented link to Nvidia could trigger an 80% market crash. Its correlation with Nvidia hit 0.75, a one-year high, driven by a circular investment loop among AI giants like OpenAI and AMD. This double bubble scenario, echoing the dot-com bust, raises fears of a widespread collapse, with some comparing crypto to a Ponzi scheme. If you're holding crypto, listen up. The market just saw a massive $200 billion wiped out in hours. This plunge followed former President Trump's announcement of 100% tariffs and export controls on China, escalating trade tensions. Bitcoin crashed to $107,000, triggering $7 billion in liquidations. A stark reminder that global politics can execute smart contracts on your portfolio. Major crypto figure just received a chilling Google warning about state-backed hackers. Changpeng Zhao, former Binance CEO, shared an alert suggesting government-backed attackers are targeting his account, speculating it could be North Korea's notorious Lazarus group. Lazarus is infamous for massive crypto heists, funding sanctioned programs. The Google states these warnings are precautionary, not necessarily a compromise. The US dollar is experiencing its worst year in over 4 decades, triggering a significant shift in global investment. Bitcoin, gold, and silver are surging to all-time highs as investors seek safe havens, moving away from the dollar. This debasement trade reflects concerns over US sovereign risk and a potential shift in the global reserve currency landscape. While Bitcoin seems stuck around $121,000, a massive, unseen force is quietly building pressure for its next big move. US spot Bitcoin ETFs have logged 8 straight days of net inflows, soaking up more BTC than miners create, pushing total assets towards $160 billion. This structural supply deficit, coupled with macro tailwinds, makes a range break towards $130,000 increasingly plausible, provided key support levels hold. Ethereum is making a massive move towards user privacy with its new Kohaku wallet, while Validator queues hit a 2-year high. This framework, led by Vitalik Buterin, aims to enhance Web3 wallet security and autonomy, reducing reliance on centralized services. The surge in Validator queues, driven by staking demand and new ETH ETFs, signals a significant institutional reshuffling and network evolution. Imagine if your crypto investment dropped 90% overnight. That's what happened to many BNB chain meme coins, erasing millions in investor capital and leaving a whale with a $1.2 million unrealized loss. This highlights the exit liquidity, risk, and hype-driven markets, reminding us that being early is crucial for speculative assets.